Luis Miguel Lexo. I'm the Managing Director and co-founder of Brick BC Projects. We tokenize real estate here in Australia, specifically focusing in Brisbane, Gold Coast and Sunshine Coast, which is obviously we are the 2032 Olympic City here in Brisbane. So we're very excited in terms of what's happening here in the property market, regardless of what the Olympics are going to be done, because we actually started this journey before the Olympics were awarded. But we're really excited what's happening here, and especially around southeast Queensland, where our focus area in terms of what the property values are doing, and just the whole drivers that are happening here in southeast Queensland. So, but Jake, do you want to introduce yourself, Jake?
Yeah, sorry about cutting out earlier. Anyway, so my name is Jake Bernard. I am project manager for Dwell Homes Inc. We are a custom home building company in the U.S. I am also CFO and co-founder of Renewablox, a renewable energy company that will be also mining Bitcoin. And we are tokenizing through security tokens on the Ravencoin blockchain. We have already minted our security tokens, or at least a partial amount of them, because I had to get them out there at least. But there is a video that I'm going to be posting on a pinned tweet above that can demonstrate how that happened. And it's very easy to do. So, yeah.
Fantastic. Before I introduce our special guest, just a reminder there in terms of the pinned tweet. So if we sort of go from the first one, just in terms of explain what they are. So we've got Jackson's article that he wrote. So that was his first article he wrote on real estate tokenization. So it was a fantastic written, which we'll go into a bit later on with Jackson. Also some guides. One from the DigiShares and Real Estate Exchange. Just a bit of a guide there. We've also got JC's article. He wrote a fantastic article in terms of asset tokenization, obviously mentioning real estate tokenization. And JC is actually in the house here. We can see him. Thank you for that fantastic article, JC. Just in terms of our blog, in terms of what problem we were trying to solve, an article that I wrote personally. So again, just sort of shows in terms of what was the drive for us in terms of using blockchain to solve the problem we were trying to address. So just an update on those tweets there. Jackson. So today we're very fortunate to have Jackson along. Jackson is a community manager at STM Markets, and he's very much in the deep in terms when it comes to real estate tokenization. So without further ado, Jackson, just a bit about yourself in terms of your background, where you've come from, where you are today, in terms of what's your involvement with STM Markets in terms of your role as community manager.
Well, Louise, I just want to start by thanking you for having me. And so, I'm Jackson Blau. I'm community manager here at Security Token Market. And like I mentioned a little bit earlier, as some of you were trickling in, it's been a long journey to actually sitting down here in sunny Miami, Florida at Security Token Market. For those of you who are unfamiliar with Security Token Market, we are a data analytics and media firm focused solely on creating content around security tokens and helping grow the infrastructure with them. When I'm talking security tokens, we're referring to digital assets. It can be real estate, such as Brick BC and tokenizing properties in Australia, or it can be anything such as equity tokens, debt-based products. Really, any imaginable asset that trades can be traded as a security token, which was why I was drawn to it. I really ended up working here through my real estate background. Up until last summer, I had solely worked as an intern within the real estate industry. I worked with a development company and an investment management company. And through those two internships, I kind of saw that there not only were places in the real estate industry to improve efficiency and just automate back-end processes, but to just make more seamless markets. Right now, I saw a really segmented market where it took a lot of connections, money for everyone to get involved in any capacity. And I didn't really like that we lived in a market that existed like that. And so last summer was working with a venture capital firm, and I was tasked with giving an investment thesis with my real estate background. And at the time, a deep passion for cryptocurrency. I was looking for the intersection of the two. This is actually when I had what I like to call my first big realization in the cryptocurrency space. And this is when I truly made the distinction between what a security token and a cryptocurrency was. Yeah, at the time, I didn't really know what a security token was. I was investing in cryptocurrencies and thinking that they were security tokens. I was investing in ETH, and obviously Ethereum is a utility token that has a lot of utility. You pay your gas in it. There are assets you can buy on chain now. There's a plethora of different things you can use ETH to do. But some of these other cryptocurrencies that I was investing in were just pure speculation. And the way that a lot of retail investors are looking at these cryptocurrencies is similar to stocks. But in reality, if consensus raises at a four times the valuation that they do their previous valuation, and they're able to start becoming profitable, and it's at a point where they would be public, the investors in ETH are not getting exposure to that. And so I had this realization that if I was investing in utility tokens, they needed to be put to work. And then beyond that, I turned my eyes and started looking to invest in assets. And so I started writing this investment thesis, and there was no one producing data or content in the space. I could not escape the security token market. My ears were ripe from listening to Kyle and Herwig's entire series of podcasts and reading all the Tokenized this series that Peter was putting out. And it eventually got to the point where I needed to talk to them. I needed their help, and they were the only guys in the space doing this. So I reached out and I offered to help them in exchange for a little bit of help on my investment thesis. And they took me up on this, as it was at a time where they could use a little bit of help with social media. So I started doing some social media help in exchange for talking with them, or with Kyle, once a week, and he worked me through my investment thesis. And now since then, we built a very trusted relationship, and through time, they gave me more and more responsibilities, and now I'm happy to say that I'm down here full-time as community manager, and I've been on for almost 6 months now as community manager.
That's fantastic. So your journey started, obviously, with them as a starting point, trying to look in deep and getting educated with the STM market. Kyle actually has been on the show before as well, so we've actually had him on a few weeks ago, or probably 2 months ago, actually. And I actually haven't shared the secret in terms of how STM played a part in terms of the early beginnings for us. But I actually have shared it in a message to, I think I've shared it to Kyle and Herwig. When we started our journey 2.5 years ago, and me trying to solve a problem in terms of the clunkiness of real estate and trying to use blockchain as the solution, I actually did start one of my key research points when I was doing the early research actually was with STM market, and hearing Kyle and Herwig in terms of what they were saying in terms of tokenizing assets and so forth. So you're not the only one. That's where I started as well, Jackson.
It's where everyone really does have to start. This is such a complex space to work in, and blockchain in general, there are so many nuanced terms, acronyms, different meanings that typically have other meanings. And so there really is a learning curve in this space. And so it's okay that when you're first thrown at some of this content, that you're not understanding it. But right now, what we've seen is a lot of people are not open to learning about it. They're hitting it. They're almost being ignorant to the fact that that there's stuff that they don't know, when it's just the reality that there's a lot that we don't know. And it's something I like to live by, that there's more that I don't know, and there always will be, than stuff that I know. And it's what motivates me to learn more. But everyone has to start somewhere. And that, I just know security token market has been that place for a lot of people. And not only that, it's helped me take my knowledge to the next level. That's seriously, we're producing all types of content, from educational stuff that helped me get into the game, and stuff that now I'm watching on a regular basis just to stay sharp, learn more about security tokens, the latest stuff going on. And more than that, I learn about a little bit more of the institutional side, where I haven't had that much experience yet. Our ARCA series is some of my favorite content we produce, and Peter and Jonah do such a fantastic job producing that with the entire team over at ARCA. I'm not sure if you're familiar with that.
Yeah, I have heard that. Yeah, that they, and again, it's such a central point. The STM, I always say, central. When someone's asking in terms of where do I start researching, and again, for us, we always point to STM as a starting point, just like we did when we first started. Something I always do to our special guests when they come on, and before I put you on the spot as to what the thing you got to do. I'll just shout out to the people who join us. Tron Black, thank you for joining, Tron. JC, Morgan, Cosmic, Mirage, Ligne, sorry if I was pressing on, Abdulas, Atten, and Balaz. Thank you for joining us and getting to hear such great content that Jackson's going to be sharing with us. But yeah, look, something I always put our guests on the spot, Jackson. Everybody's got their own definition and description. What is real estate tokenization? How do you sort of sum it up to say to somebody who's obviously coming from mainstream, trying to make their jump into and getting into tokenizing, or either buying tokens or doing it themselves in terms of tokenizing real estate? What's your definition of what is real estate tokenization?
So, in my opinion, real estate tokenization is the easiest way to democratize the currently siloed real estate industry we see today. Meaning that we are now, through real estate tokenization, able to not only connect markets that have never been able to be connected, but provide secondary liquidity for assets that right now are not, that if you as an investor need liquidity, cannot have liquidity. Real estate tokenization is the next evolution, or the necessary evolution that the real estate industry has been waiting for decades for, in my opinion. And obviously there are so many facets of it that I could keep trying to define it in a couple lines, but in my opinion, it is simply the best way to democratize the entire real estate industry globally.
That's fantastic. Fantastic. It's always great to get people's different descriptions and definitions, and thank you for sharing that one with us. It's now recorded. Now we've every week we have a definition, and we just keep compiling those definitions from everybody who's coming.
I love that. Everyone's has got to be different, and there's so many different ways that you can take that question. I'd love to hear your definition. What do you see real estate tokenization as?
Mate, I'm a very simple person, as a lot of people know that listen to this show, and I always start with a very simple example, and I say in terms of think of 4 or 5 people getting together. Like we've all thought of it. We've always done. Some of us have done it. Some of us have thought about doing it. Is looking at a property, say $1 million property, and everybody wants to go on a journey together as partners in that property, and you kick in $200,000 in. And you collect the money, collect between the 5 people, and you buy that property for $1 million. You don't want any banks involved, and basically go on a journey together. You buy that property, then you reap the rewards, all the benefits that comes from owning that property, and you're on a journey together.
I think that's a great explanation, and like you said, it's simple.
It's exactly the same thing, but now we've got it global, and we can have 40,000 people going on a journey together. And having the rewards
exactly.
So that's basically how I try to explain in a very simplified manner. But it's on a blockchain.
Exactly, and I'm going to take some notes from that because I like the way of starting with like a smaller syndication type example, and even the aspects of removing the banks and the middlemen that we see. And yeah, I really do like your way of describing that.
Thanks. It's and again, like I said, just keep it very simple. Sometimes there's probably too emphasis in terms of blockchains.
But I'm just saying, at least from my experience in this industry, people need and want simple. And especially when you're coming into the industry as someone that might be well-versed in real estate, but not in blockchain and tokenization, if I'm coming at you with a plethora of new words that you've never heard and don't understand, you're more often than not going to be turned away instead of enticed. I personally, when I hear stuff I don't understand, am immediately turned on to it and need to go and figure out what it is. But a lot of people aren't like that, and when they hear something that they're not understanding, aren't as driven to go and figure it out. And so having like very simple explanations, and my favorite are analogies, are really, really important and beneficial.
Yeah,
in my opinion.
Absolutely. So, Jackson, probably as a starting point in terms of sort of probing some things that obviously in getting deep into your knowledge and experience that you've had in the real estate side of things in tokenization, with the article you wrote, was actually quite a fantastic article. Obviously featured Realty, which again, Realty is actually they are very much the early pioneers when it comes to real estate tokenization. We actually spent a bit of time doing our research in terms of what they were doing, and again, it's one of those things. Why reinvent the wheel, right? You have to look in terms of the early pioneers, and they were very much very early pioneers in terms of tokenizing real estate. Bob, do you want to just talk to that article in terms of some of the features that in terms of what sort of drove you to write that article and some of the key features around it?
Yeah, I'd be happy to. So, if you haven't seen or have not had the chance to read yet, I was able to publish my debut article just a couple weeks ago. And this article covers Realty. And as Louise, I apologize for mispronouncing, was covering, Realty is one of the very early pioneers in the real estate tokenization space. They actually, at this point, have tokenized, I believe it's just under, maybe just over now, 200 properties between the Ethereum and Genesis chains, or a lot of people know it as XDAI. And what is so special about all these properties is that they've brought the barrier to entry down for these real estate investments down to just $50. So all their primary issuance of these tokens starts at $50, and you can invest whatever allocation you'd like into these properties. They have a maximum holding, which is that I believe an investor can only hold up to 10% of the property's total tokens. But the reason I chose to write my article about Realty, it actually wasn't really a decision. I'd known for a while that I wanted to write on Realty. So I'm from West Bloomfield, Michigan, which is a suburb of Detroit. And Realty started tokenizing their properties in Detroit. And Realty actually uses a similar investment strategy to my second real estate internship. They started investing in Section 8 and HUD properties specifically, meaning that the government is helping provide that rental income. And this is part of the reason that Realty has been able to provide such stable, consistent cash flow to their investors. And it's because they're not really dependent on their tenants paying out the rental income. They're backed by the U.S. government. So during COVID, when everyone was defaulting on rental payments and not able to scrap together the cash that they needed, these Realty properties were getting 95 to 99% of rent the entire time. And so there was actually one report that they put out that I detail a little bit that shows that during this time when a lot of people weren't able to make any money, you would have earned 11% on an $1,000 investment, I believe, just over this little bit of time period. And so, in my opinion, Realty had been a company I've been looking at for over a year, and I've been wanting to put pen to paper and write an article about them, but I've been waiting for a good opportunity. As we both said, they were a very early pioneer, and they've been putting new properties onto the blockchain for a while. But I didn't necessarily see a good time for me to go and write about them. There's obviously, I could have done it whenever, but I wanted to write about something new as well. And so with the unveilment of their RMM, their DeFi platform in conjunction with Aave, I thought that this was the perfect time to put out my article, because I actually, this is one of my favorite applications of real estate tokenization, is that you can then collateralize your tokens and take out loans against them. And so this is really the first security tokens in practice I've seen that you can actually now take out loans in stablecoin against your collateralized real estate and have your collateralized and have the real estate tokens actually pay down the loan amount for you, all on the blockchain, all automated. And so when this RMM came out, I jumped on my opportunity. I had the draft all ready to go, and so I just finished it all up, updated all the information, wrote my section on the RMM, and got it out. But I've been waiting for a second to put this out.
That's fantastic. It's quite interesting in terms of obviously how many properties they've tokenized, and I know I've followed in terms of seeing what they're doing, because they've been early pioneers. A huge respect for what they've done. It's just amazing every time they put a stack of properties. I still remember when they first put the first lot of properties out, how they just got sold within, I think, a day. I think it was, and
they're still selling out crazy fast. If I had to be completely honest, and for you guys listening, this is not financial advice at all, but if I could be investing in one thing right now, it probably would be realty tokens. However, I am not accredited and I live in the US, and so that is not a possibility for me. But I love this investment structure. I love realty. I love what they're doing, and I love the investment opportunities that they're providing. And that was really some of my main motivation for writing it. I've been able to talk to realty a couple of times, and I'm hoping that one day we see them start to pivot to something a little more retail friendly. That's obviously down the line once we get more regulatory clarity. But that, I think, once a company is able to come into the space and really provide retail investors and opportunities like realty or any of these other tokenization or real estate tokenization platforms like yourself are able to provide. Once we can get those to retail investors, it'll really be a game changer. And I obviously know that we have lowered the bar even more, but we can still go lower. To entry.
Given your deep discussions with realty and obviously finding out the nitty-gritties in terms of what they were doing, in terms of their token buy, is it a mixed? Is it mostly obviously not retailers, but in terms of individuals, families buying? Is it institutional that are buying?
So I actually haven't seen I'm not too well versed on who their actual buyers have been, beyond the fact that they have been very popular in the French market. I know that they have a lot of French token holders and buyers, and that the market in France has been particularly friendly to the realty tokens. I'm not too sure if we're seeing institutions, individuals, families, or anything along that line, but I just know that right now we have seen them gain a really strong foothold there.
Yeah, it's quite amazing. I said, and probably just to add to that, all this information we provide here is all education, whereas we're not providing any financial advice. If people are here in terms of things we're saying, you need to do your own research. We're just about here providing education, awareness in terms of all these different elements of real estate tokenization that we're sharing with everybody here in this space. But yeah, Jackson, in terms of having a look at terms of other players in the market, and obviously you've given that job, you're obviously in deep in terms of tracking who's out there. I mean, by last count, I think it was 20 or 21 tokenization platforms. That's both in residential and commercial real estate. Have you have you got a number?
So I actually, if you want me to give you like a true number, I can count right now for you. But I don't have like offhand a number, because like you said, this is an exponentially growing space and everything's always changing. But we actually very recently put out, in conjunction with Cointelegraph, our security token market real estate intelligence report. And in this, we give what, in my opinion, is the most, and it's not even in my opinion, it just is the most comprehensive overview of the real estate tokenization industry that exists. And just looking at this right now, I have it up in front of me. This just highlights right here 15, and there's got to be this isn't all of them, and this is just like key players, case studies, stuff like that. I can try and find a link to a tweet with that in it if people are interested in that. That's if anyone's interested, that's the Security Token Market Real Estate Intelligence Report. You can find that housed on the Cointelegraph research terminal. But yeah, there are so many players in that I was already planning to highlight. Is there one that you had in particular that you wanted to talk about?
No, look, I was always interested because obviously, like for us from Brick BC, and also I can speak on behalf of Jake, and correct me if I'm wrong, Jake, I think we're all trying to support each other in terms of new platforms coming on and focusing in different parts of the world. And for us as a community, as a community of platforms that are tokenizing real estate. Obviously, we like to sort of be sounding boards to each other, and the more that come on, the better it helps our industry develop and bring mainstream on, because there's we know that the space is such a big space when it comes to real estate property around the world, and given how small it has been tokenizing, given very, very much in crawling stage, probably not even crawling stage, and again, for us, it's trying to sort of share around and all helping each other. Like last week, we had Robinland, we had Scarlett from Robinland on. Again, talking about what they do in the commercial real estate perspective, and we also had, we've had a few people in the same space, and so for us, always trying to help each other. But I know in terms of, look, if we have a look at residential, obviously we're in there, realty's in there, but I haven't actually come in terms of residential. Then you start talking about commercial. As I said, we've got Robinland, we've got Red Swan, Mira, Aspen.
Yeah, Red Swan has been one I've been tracking for a while. Red Swan was going to be the company that I was going to highlight in that venture capital investment thesis that I referred to, that I worked on last summer. But I actually ended up proposing an investment in Venium instead. But I love Red Swan. I've actually, full disclosure, I participated in the Reg CF crowdfund. I don't know if you knew that, but they actually held their own Reg CF, where they raised at a $50 million valuation, and were able to. I think they ended up raising $1 million. And yeah, it was a really cool experience. I was able to talk with their CEO, Ed. He's also a University of Michigan guy. Go Blue! If any of you guys in the audience are Wolverines. And yeah, they, for anyone that's unfamiliar, are a commercial real estate tokenization platform focused specifically on grade A commercial properties. Last time I checked, I believe that they had 16 properties, mid and high rise. They have properties ranging from California, New York, Texas, and they were actually tokenizing a hemp farm in Canada. And yeah, they have just been doing a lot of really innovative stuff. All these properties will be traded on their marketplace on the blockchain, and they're truly a special player in the space. I think that they're doing everything right, and they're taking a little bit different of an approach. They right now are only for accredited investors. They have a minimum investment of $1,000. And I think you can really see that in the way that they market themselves, which is really a good thing in my opinion. I love what they're doing over there. Another company that I'm really excited to see is going to be Night Dragon. Have you heard about the news in London with Night Dragon?
No, not that one, no.
So Henry Cheng, I think I pronounced that right. He is a wealthy individual, a property developer. And he right now, or I think it was a week or two ago, just announced that he's going to begin tokenizing his own real estate portfolio. And they're going to start this by tokenizing one, I think it's apartment building. Yeah, here, let me get this up real quick. Yeah, it's going to be Night Dragon's Building 4. It's a 191 unit tower on the Upper Riverside in London, and it is going to be a $140 million tokenized raise, and is going to commemorate the start of Henry Cheng tokenizing his entire portfolio in London, which is going to be another really cool commercial real estate tokenization player.
Oh, that's fantastic. That's great to hear, and things that's starting to become more as a common in terms of what people are doing, because I've spoken to a few people in Europe. I know in Holland, there's a gentleman that I got talking to. They're looking at tokenizing their project. It's a commercial tower, $85 million commercial tower in Holland. And
wow.
So really in the deep, trying to work out in terms of tokenizing that. And they've got some in US as well, some towers in US. They're very much, they're winning awards with their towers that they build. They're built.
Oh, wow.
So they again, this is where that for us, we like to be supportive and be a sounding board in terms of other players that are looking. And we had a great conversation a month and a half ago, and in terms of how what we've done, and obviously we're not in the same scale because we stick to residential and between 2.5 and $4 million residential luxury homes. So a different model to them, but in that commercial space, that's what they're looking at doing. And again, that's becoming more common. People like you said, Night Dragon, guys like that are doing that are they own it. They're looking at how do we actually take our business model to the next level to provide to everybody around the world the access to property that people never had a chance before. So
it's really, really it's fantastic, and I love what you guys are doing over at Brick BC, and I love the series names and everything, the different branding you guys are doing with your properties as well. I really am excited for the Dolphin property to come out, and the koala and everything seems to be going great, and so I'm really happy for you and everything you guys have got going on over there. There's actually one more player, or another. I think they actually, so they're USPC, United States Property Coin, but they I believe do residential and commercial. I believe they do multifamily as well. And Premier Development out of Southern California is the real estate development firm behind this. What's going to be a new token, but not just a security token. It's really interesting what they're looking to do. They're looking to create an entire ecosystem behind the security token, and right now it almost feels like it might be a combination between a cryptocurrency utility token and the security token, but more or less their vision is to go and tokenize Premier's entire portfolio of investment properties and have it backed by this USDC coin. And their entire thesis is that real estate has always been a great hedge against inflation, and that by tokenizing it, it's only going to make it more efficient and allow them to do more. And so I really like their model. We're getting to work with them over here at STM a little bit, and so I just wanted to mention them as well.
Yeah, that's great. And again, actually, it's just the point you made about inflation, and obviously we all got issues with inflation. Doesn't matter where you are, what part of the world you're on. We've got our own. These guys are probably a bit more than ours, but we've come in and the stats quoted is we know that's understated because we know the inflation, the official inflation rates are much more what's being stated. So, and again, I think sometimes people get confused in terms of the crypto market's down, that means it's going to affect the property token. We always try to remind people that the property tokens are backed by a real estate property. So it doesn't matter what the crypto market does. These tokens are backed by real estate you can actually touch. And we know what property values do over time. And what they do in Australia, they keep going up, they don't go down.
That's true just about anywhere you go. Over time, real estate, I mean, no matter where you are, real estate tends to be one of the best performing alternative assets, or just assets in general you can be invested in. And that's honestly, in my opinion, why they make it so hard for everyone to get in, because right now we live in a world where it almost takes money to make money. And through blockchain, through tokenization, we're finally seeing some of these barriers be broken down and allowing players that might not be able to invest might not be able to invest nearly as much as players in these private markets, but still are interested in investing. And so this is really why I got into this space, to bring these opportunities to the table, and like you said, help shed light on all these different people doing innovative things and different things across the world.
Absolutely. From your perspective, Jackson, obviously, we've got the big wave in terms of real estate tokenization around residential and commercial, even industrial and so forth out there. I know I've even come across somebody that was doing some farms in England, tokenizing some farms in England and so forth. But from your perspective, in terms of, without getting too technical, we just want to sort of keep this at a very high level, in terms of blockchains, you want to just share your experiences as you're talking to various platforms in terms of tokenizing real estate, as to what sort of chains that people are taking on.
Oh, okay. I apologize. You cut out for a brief second. Would you mind repeating that?
Yeah, no, I was just saying, obviously coming across different platforms in terms of real estate tokenization, and just look, without getting too technical, just sort of keep it at the high level. around what blockchains that platforms are tokenizing on. Sort of give us a bit of from your experience in terms of the reasons and what sort of blockchains they're tokenizing on. Obviously, we started on the Ethereum blockchain ourselves, our first one, but over the second one that's coming up, and thereafter we're doing it on the Ravencoin blockchain. So, what are your experiences in talking with the various platforms in that space with blockchains?
So, in my experience, everyone at the beginning loved to use Ethereum. Obviously, Ethereum still is the incumbent in the smart contracts space, and they are definitely a force to be reckoned with. But as we've seen over the last year and a half, 2 years now, the scalability of Ethereum was not as well planned out as people thought. And so we've been seeing gas rate spikes. We've been seeing it become less efficient. We've been seeing transactions take longer. And so throughout this time, I've started to see more and more people be willing to pivot to whether it be a layer 2 chain, such as Polygon, XDAI, or like Genesis chain, or even completely switching to another layer 1 like yourself, like Ravencoin. And would I be incorrect in calling Ravencoin a layer 1 because technically it's a Bitcoin fork?
Yeah, it is. It's a Bitcoin fork, but it is a layer 1, correct? Yeah.
Okay. So yes, just people are looking to get onto these blockchains where they're more efficient. No one wants to pay hundreds of dollars in gas fees, especially when you're fracking these assets into shares that might be trading for around $50. For example, like with Realty, you're not going to want to have to pay a $50 transaction fee every single time. It just doesn't make sense. And so we've started to see more and more people look for alternatives, and whether we have found true, I don't think in my opinion we have found a true alternative to Ethereum. There are a bunch of competitors that do various different smart contract things, but right now Ethereum is the incumbent, and despite on other blockchains, we're able to see faster, more efficient, less cost permitting transactions. We've still seen a lot of people tend to tokenize on Ethereum.
Yeah, with we started there on the Ethereum, and I've shared this with quite a few people on the various shows that we've had. We started there. Obviously, these shares, they created our platform and they maintain our platform, and they do also Red Swan's part of our stable as well. Swan commercial, and Mirror as well. So obviously we were guided by these shares in terms of what chains are out there, and so when we first started on the Ethereum to mint the Brick Koala token series. Obviously, we planned this out, and by the time we got to create, the platform was created, and then we minted. We started trying to mint from October last year onwards, and we had a problem, gas fees. Now, this is in the budget that I put together. We thought, okay, $800 would be sort of the max, as very extreme as a gas fee. The Brick Koala token series, it got up to $28,000, and I kid you not. Because of
that's insane.
And again, without sort of boring you, it was actually the day before Christmas that I got the message from the guys from the team at DigiShares. You need to go on there because the gas fees all of a sudden dropped next to nothing. What was something? Anyway, Just hovering around 25,000, 28,000. All of a sudden, I've gone on there personally and actually tokenized it, and it was $820. I think it was in the end. So.
That is so crazy, and that was why I was happy you brought up this question, because it really doesn't make sense to me why we see so many people continue to tokenize their assets on Ethereum when there are so many of these competitors out there that do offer, in my opinion, comparable if not even better services. I mean, whether it be a Ravencoin, whether it be Avalanche, like we're tokenizing on, whether it be Algorand, Tezos, Polymesh, there are all these chains out there that are specifically built to scale for tokenized assets. And it blows my mind that we see so many people continue to want to mint on this network just because it's the incumbent. And seriously, it's my opinion. that we are going to see over the next, and whenever people start really making sense of everything that's going on and understanding gas fees, we are going to see people start to migrate away, and we'll see Ethereum start to lose more and more market share.
Well, hence what we've done. I mean, we needed to pivot. Basically, obviously, we knew there was going to be problems in future in continuing that path, and obviously, these are shares that they actually engage with Ravencoin, so that we could then tokenize on their platform on the platform with Ravencoin. And probably while it's sort of actually quite Sean Black, actually, who's the lead developer and one of the co-founders of Ravencoin, has been we're fortunate enough that he's actually joined. I just saw him pop up earlier when we started the session, and thank you for joining, Tron. Actually, it'd be great for me to have Tron just to say a couple of words. If he, I'll just invite him up to just say a couple of words. From
and if Tron, you're not around, I appreciate you popping in too. We love everything you're doing over at Ravencoin, at the team over at STM. We've got a very good relationship, and I see JC Keen out there as well. So just want to say hey to you.
Hey, John, how are you? Thank you for popping into the session.
Yeah, happy to be here.
While we're talking on the blockchain, it's probably good to just have a few words from you in terms of obviously the Ravencoin was started to purposely for asset tokenization. Probably just a few words from you from that perspective.
Sure. Yeah. So for anybody here who's maybe not familiar with Ravencoin, it was created as a project. There was no by a division of Overstock that was a venture firm within Overstock called Medici Ventures. So no funds were raised for this. It was just all of the development was provided by Medici Ventures. It's not a company. It's just a project, an open source project. Kind of in this.
Wait. So Jessica Burns and Megan Nyvold are not the CEOs?
Yeah, we've had this running joke about CEOs and Sally being the head of marketing and things like that. Unfortunately,
they're actually going to come out with an episode of spilling the NFT on that. Stay tuned.
Yeah. So unfortunately, when we make some of these inside jokes, right, and people who aren't aware of it, some people get confused. So that's the only unfortunate.
Of course, I didn't mean to. I didn't mean to interrupt you, Tron. Continue what you were saying.
Yeah, no, that's been great. We've had this long running jokes about the CEO and the president and the Sally, the head of marketing. So it was created just as an open source project. You can go to the GitHub, which is just a Ravencoin project, and you can download the code, build it. It creates the emergent network, just like Bitcoin. We launched on Bitcoin's 9th birthday. We added the ability to create your own tokens, and those tokens get a unique name, which also has an advantage over some of the ERC20 things, because there's some spoofing and things like that went on. Even as T0 was using Ethereum, there was some spoofing that was attempted. So you get your own unique name. When you create a token, you can attach whatever data you want to it, folder full of files or a movie or a PDF, whatever you want. And then, so that's basically it. You create a token, you have however many you want. It is not a smart contract platform, but it is a tokenization platform. And then slightly beyond that and completely optional to use is Ravencoin restricted assets. These start with a $, meaning the name of the token starts with a $. And then when you use those, there's some kind of, we'll call it superpowers that the issuer, the original creator, has. And those things are intended to make it easier for an issuer to stay compliant specifically with like U.S. laws. So you can freeze trading on a specific account and things like that, because it is a security. There's tokens that, most of the regular tokens that don't start with a $, they're completely like, I'm going to say like Bitcoin, but not really. I mean, an issuer creates them, but after that they trade. You can't stop them. They trade. They have their own UTXO set, just like Bitcoin. But the ones that are restricted assets, and all of those will start with a $. That the issuer has some superpowers. And those superpowers allow you to do certain things like, let's say somebody lost them. So that was a big concern, is like, by the SEC is like, hey, what happens if, this represents, 1/10 of a building, and then the person just like loses their keys, which is certainly possible.
So one option would be for them to kind of sign a document they lost their keys or whatever, and then that superpower would allow you to basically freeze those tokens into an account with a note that said, hey, these were lost, and then potentially reissue shares to a new address. Things like that, things that kind of make the tokenization stuff make up with what was traditionally done via a database or via a spreadsheet in a lawyer's office or something like that, where if there were human mistakes and problems, that those can be corrected, but only by the issuer, and all public, right? So you would absolutely know that those were frozen. You would know that there's a note. You can also do things with stocks and equities. If you need to do like Rule 144, you could lock that up. And there's Rule 144 is for like newly issued shares, or for people who can control the who are officers. They could lock those up and say these are Rule 144 shares and things like that. So the restricted assets within the Ravencoin platform were added after the regular tokens, and they were added kind of with an eye towards being able to handle things like the stock not being able to trade for a year. Like if you issue it under Reg CF or Reg A, or not Reg A, but Reg D, which is where you're selling to accredited investors. Those aren't supposed to trade kind of open market, secondary trading to retail investors for over 6 months. And so you can actually handle some of those things as an issuer. So that's the platform. It's totally open source, totally available. You can download it, and that's it.
That's great, Tron. Really appreciate you providing those words, because it's always important to know that in terms of what the chain is and coming from you, because you were right there, created it and live and breathe it. So really appreciate those words, Tron.
You bet.
Yeah, thank you, Tron. That was a great explanation.
But yeah, look, in terms of, you've got different platforms, tokenization platforms. Obviously, real estate's what we're talking about here, that are choosing different chains, and everybody, they're choosing them there for a reason. Everybody's got their own business model and making decisions in terms of what's best for them. And all I can say, we were very, when we basically wanted to look at alternatives to move away from Ethereum, doing our research, we looked at Ravencoin, and we basically committed Ravencoin. And that's a massive decision for us in terms of the decision we made. We're not just tokenizing one property, we're tokenizing 11 properties in the first year and then 20 properties every year after that. So for us, it was a massive decision we had to make to which chain we were going to adopt. And for us, the Ravencoin blockchain ticked all the boxes that we needed. Obviously gas fees is obviously a part of it, in terms of obviously the gas fees are next to nothing. And just given the points that Tron made about the Ravencoin. So they're all the things that we switched, because we wanted to have a chain that's scalable and we're not going to have the problems that we encountered before. So Jackson, in terms of when you talk to some of the other platforms and they're choosing chains, what's probably a couple of the critical things, say 2 critical things that they saying as to why they chose that particular blockchain?
So, I think we're hitting the biggest one head on the nail, or the biggest 2 we're really hitting head on the nail right now. The first is obviously cost, and usually the biggest cost associated with using any of these chains tends to be gas fees, and then if not that, minting fees. So depending on the structure of your token, let's use Realty for example. Realty actually they started on the Ethereum chain, but actually pivoted to the layer 2 once they realized that it was way too expensive for them to be paying out daily rental income because of the Ethereum gas fee spikes. And this has actually continued to happen. They actually, before they pivoted to a layer 2, decided they used to do daily rental payments, meaning that you would have USDC deposited to your MetaMask wallet every single day. Now, instead of every single day, it's on a weekly basis, which in my opinion is almost just as good. But yeah, they were just looking to save themselves some costs in terms of gas fees. And so obviously the first biggest is costs, and then the second, in my opinion, is scalability. And they almost go hand in hand, because if the scalability of the chain isn't up to par, then as the chain grows and gets more use, you're going to end up paying more in gas fees, and it's not going to be cost effective. effective anymore for you. And so you have to take into account the chain, its ability to grow with you, your company, and the ecosystem. And then also you take into account the costs that you're paying now, as well as your future anticipated costs.
It's interesting, isn't it? That's I mean, obviously obvious, but it's always obviously gas fees was one of the reasons, and scalability was also, and actually I'll open up anybody wants a mic and actually be able to ask any questions. But just continue on that point. I think Tron, you've been drilled enough from me in terms over the various sessions that we've been on. We always talk about scalability, and I always ask Tron in terms of well, you know what? Obviously, we're very early in terms of the Ravencoin blockchain, and what's the scalability as it got the ability as we bought out properties and we start talking about $85 million projects that I mentioned earlier, and all these different type of properties coming on, as it got the ability to handle from a scalability perspective. And Tron's always been he's always said yes, this is what it's built for, right, Tron?
Yeah, I mean, it doesn't have infinite scalability, but it has lots of room, and it runs about 20x capacity of Bitcoin, just because it's a little faster and a little larger blocks.
Yeah, and it gives you confidence, obviously, for us. Like, it's a massive decision we made to switch, just like anybody that's looking for a chain, because obviously, it's a massive part of your overall business vision, your overall business plan, that you don't be changing blockchains every year because things haven't gone right. So it's a critical decision that we made, and no doubt, Jason.
100%.
Yeah.
And like you said, it really is more difficult than people like to think to pivot blockchains, especially if you already have existing assets on a blockchain that you're trying to now transfer to another chain, depending on that chain's interoperability features that you're trying to transfer to, and the chain that you're trying to transfer, or I meant more the chain you're trying to transfer from, and the one you're trying to transfer to. You have to take into account all whether they're interoperable, and even if you can do it or not. And so it really can be a pain in the butt to do. And so, like you're saying, it really is something that people should consider at the beginning of their tokenization process, and not save till they're out there and paying $5,000 in gas fees.
Yeah.
Like you were saying. And I'm really happy you guys were able to make the pivot. And yeah, I'm just happy everything was able to work out. Facing those drastic gas fee spikes, that's crazy, man.
Yeah, well, it couldn't be painted every time. Obviously, given the number of properties, and it was actually, of course, obviously the upfront was obviously big in terms of how it got up to. But for us, it was more in terms of ongoing. Okay, well, every time people buy and sell, that means that the gas fee is going to be a massive issue, and we didn't want that to be a barrier for people to, especially if you're coming in for the first time, because our market is very much retail market, so we don't want that to be a barrier for people to come in and see the massive gas fees that then they have to cough up as they buy and sell. So, yes,
and I'm not sure like what your distribution structure is or plan to be, but every single time you're going to pay a distribution, that's gas fees again on your end, and so that's one more reason that it's that much more, or that important to take into consideration, not just the chain you're using, but why you're using it, the cost behind it, and the expected future cost of it.
Absolutely, Jackson. It's I know I try to keep to an hour, but today we could be talking here for the next 3 hours. But obviously, we all got things to do.
I can talk about real estate tokenization all day.
but there's one last point that I do really want to cover. I think it's important, is around the secondary markets. Obviously, some of the players you've been talking, the platforms you've been talking to, and obviously everybody wants a secondary market, because it's all about liquidity, right? Can you talk to us about in terms of some of your experiences, in terms of your discussions with various platforms around what they're doing from a secondary market perspective?
So right now, we have seen a lot of these tokens begin to trade on the secondary market, especially with realty tokens that have been were issued primarily over a year ago. And so these tokens are now trading. We've seen a lot, either tokens go, and like the realty example, they actually partnered with Uniswap and built out a DEX for themselves called Levin Swap that you can now go and trade these tokens on. They also have another liquidity solution that I'm actually not too familiar with them, and they're called SwapCat. I believe it's a marketplace that you can just exchange the tokens on. But that has been the most common solution right now for the secondary markets is people are going and finding different ATSs. For those of you unfamiliar, an ATS, alternative trading system. This is the licensing need in the United States to operate as a marketplace. Essentially, this lets you operate as the most simple marketplace, plays bids and asks, and that is basically the most simple functionality, meaning that I have a share, I want to sell it, you want to buy a share, I say what price I want to sell it at, you say what price you want to buy it at, and when they connect, it's executed. But there's no one in the middle, there's no one playing market maker right now. There are companies in the space like IX Swap that are going to provide automated market making services. But right now, we really have seen a lot of these assets be somewhat illiquid because of that lack of market makers in the space. But as we see more and more people begin to enter this space, liquidity issues are going to dissipate, and we're going to see these market makers come to life and actually be able to provide liquidity for these assets, whether it be through liquidity pools or actually market making themselves.
Yeah, there's I think in the secondary market still very early, and there's obviously some players moving in. Obviously, at the very at the top end, I've got T0, and I know T0 they've got the Mirror project.
Yes.
In there. I know Mirror project came out of the DigiShares. They're a DigiShares client, so obviously that was their pathway to T0. And again, that's we like to think T0 ultimately could be an option for us, where we put out just provide that liquidity, provide list on that T0. But there's a lot of steps before then. We've got and I know the DigiShares have got their real estate exchange they're working on at the moment, which I think later on this year should be up and running. Don't quote me on the timing, but again, that's a secondary market that we'll be looking at to provide that actual liquidity.
And I think one of the coolest parts about security tokens is actually the ability to cross-list and be on the same book. Right now, at least with some of the security token platforms, that capability is there, like specifically with T0. But you can actually have these assets cross-listed on multiple platforms on the same book, trading between the platforms, completely interoperable. And I just think that is so cool, and it's only going to help enhance liquidity in the long term. Right now, people have looked at that like it could be a bad thing for liquidity because it could stagnate where the tokens are. But as long as we're not allowing these ATSs to create siloed ecosystems for their tokens where it's truly not interoperable and they're working on their own book, then these tokens are truly going to be able to be traded between marketplaces, which I think is just revolutionary.
Absolutely. What's some of the? Are you seeing any sort of other secondary markets sort of at the lower end that you just popped
Or are you talking about in terms of being interoperable right now?
Yeah, correct.
Not in terms of real estate, but we actually are writing a report right now. It's almost finished, just touching it up and getting it ready to produce. We were actually able for the first time in security token market, or at least the first documented time, to arbitrage a security token. Are you familiar with the Exodus token?
I've heard
Exodus movement?
I've heard about it, yeah.
The Exodus token is, I believe, a revenue or profit share token. Or actually, no, I take that back. It actually is, I believe, just preferred or Class A stock in the company Exodus. And what they do is they provide a crypto wallet. It's essentially meant to be a step above Coinbase, but a step below MetaMask, and be a nice happy medium for people looking to take custody of their own assets, learn more about crypto, and really get involved. And so they have a really, really, really nice interface that is super nice to use, easy. It actually stakes your assets for you. And like I said, they tokenized their company it was the first full Series A, or not first full Series, it was the first full Reg A raise in the United States. They were able to close a $75 million round. And so this token trades currently on T0 and Securitized. And so we were actually able to buy the token on T0 transfer it to our account on Securitize, and then sell it on Securitize, where because of liquidity differences, we were actually able to capitalize on a premium and make 130% over a 3-week period.
Okay.
And yeah, we were able to arbitrage over 100 of these tokens, and so it was a really cool experience, and it was nice to see the interoperability aspect of security tokens in practice. In this report, we're going to write about a bunch of other opportunities that we see in the market right now, possible ones that are possible right now currently, and ones that may be possible in the near future. But yeah, that was a really cool experience.
That's fantastic. It's great to hear that. Yes, it's such an evolving space, and I think there'll be a lot more secondary markets pop up as we move forward. As obviously as more platforms come on board in terms of real estate, and obviously people want those secondary markets, and obviously there's creates opportunities for people to create those business models around secondary markets. But yeah, it's a really evolving space.
I completely agree.
And Jackson, I mentioned right at the beginning. We did give you an Aussie name, token name, didn't we?
Yes, I'm the token emu.
You're the token emu. That's one of the ones coming up soon.
I was about to ask, do we have a timeline for the token emu property yet, or not?
We've got something coming up in the next month that we'll be revealing some things in the next month, and they'll answer that question.
I'm going to keep keeping my eyes peeled. I'm really excited for that. And yeah, I'm excited to be talking with, I'm just excited to hear more and more about the dolphin property.
Because I know Herwig's asking the same question. Is when's the RE coming out, the brick RE? Because obviously he's
we're all curious, man. We love the names. We love the series. It's great. Thank you for including us.
No, pleasure. Tropyland just came on. Just had him as a speaker. Tropyland, how are you? Got a question?
Hey, what's up, guys? Yeah, I do have a quick question. Actually, I have a question for Jackson. I heard you were talking about you're doing like a report or something. Will that report be like public, or?
So this will actually be one of our paid reports with Cointelegraph. You'll be able to find it in that Cointelegraph research terminal. And here, I can follow you right now real quick. And once it comes out, I'd be happy to share it with you.
How much is
it's going to be, we actually haven't priced it yet, so I don't want to say something and have to walk back on it. So I will get back to you on that one. It shouldn't be anything too crazy. It's going to walk you through exactly what we did, how you yourself can arbitrage the Exodus token, and furthermore, these other opportunities in the space, ones that we think that we know that you can do now that we personally might not have been able to as U.S. non-accredited investors, but as you or anyone else may be able to do given your various statuses. And so it's really a deep report. I think it's almost 50 pages. But yeah, I'll be sure to let you know when that comes out.
Great, thank you.
Thanks, Tropyland, for your question. Thank you for that. We'll just wrap it up. Jackson, I know that you've got to go. I'm just appreciative of your time to allow us to go into your deeper thoughts and your experience in terms of what's happening in real estate tokenization. And probably before we sort of wrap up, did you any sort of closing thoughts from you, Jackson?
No, I'm beyond honored that you thought to have me on this just to talk about real estate tokenization. As I said, this is one of my favorite topics in the space to talk about. If anyone ever has any questions about anything like this, feel free to jump in the STM Discord. I'm in there all hours of the day. Drop your questions, come to chat, say what's up, do whatever you want. And then I just feel like I haven't mentioned it. I've mentioned it briefly, but we at Security Token Market right now are currently holding our own tokenized crowdfund. We're holding this on Securitize. So now you actually have the chance to go and invest in our company. And all the information can be found at the link in my bio. If you have any questions about interacting with Securitize, any questions about any of the information on the page, again, feel free to come into the Discord and shoot me any questions. But really, it has been great speaking with you, Louise. And thank you again, Tron, for coming on and speaking with us. That explanation about Ravencoin was incredible. And Louise, I am really excited to share this article that I'm working on about you with you. And you should have that at least I'm waiting to see. I'm waiting on a graphic for it, but I just want to send it without it at this point.
Thank you, Jackson. Really appreciate that. Yeah, it's such an exciting space, and again, it's all about us helping each other, and collectively, we are one by one. We will continue to bring mainstream onto what we're doing, and
100%.
So I really appreciate that, mate. But yeah, look, in terms of trying to really appreciate you coming on. I wasn't expecting that, but it was great to see you pop in because I know you're busy. I know you've just been on holidays. You're probably still in catch-up mode. So really,
great. It's great to be here. Great to be back. I'm off vacation now, back into the thick of things.
That's fantastic. Thank you again. But yeah, so as we wrap up, you did mention, Jackson, about Jessica being the honorary CEO of the Ravencoin blockchain. So we've actually got a Bitcoin roundtable that we're planning. She doesn't know that yet. I've still got to actually tell her about this. That we've got the first roundtable for Ravencoin blockchain. It'll be a space session, which there'll be her first meeting as an honourable CEO. And
that is so good. You said don't tell her. I'll let you bring the news to her. That'll be so funny.
I'm actually talking about that, actually.
No, but yeah, seriously, it was a complete slip up on the show. She was dying about it, and then the reaction from the community just made it that much better. Obviously, we at Security Token Market know that these decentralized organizations do not have CEOs. It is just way too easy to call Tron the CEO of Ravencoin.
We've had fun with it. So it's been a fantastic banter.
It's been a lot of fun.
So we've actually run with it. So as a Ravencoin community, we've actually run with it, and now
I love it.
We're going to have a Ravencoin roundtable. That's what we're calling it.
I'm excited for it. I'm excited for the roundtable.
Sally will be there as well. Sally, the honourable chief of marketing officers, Sally, Megan will be there as well.
It'll be a whole company-wide meeting. It'll be great. I'm looking forward to it, man.
We always like to have a bit of fun. Obviously, property is serious. It is a serious thing. It is people's wealth and so forth. But at the same time, we also love to have a bit of fun as well. And I think it keeps things lighthearted. And
100%. We agree with you.
Yeah. Well, thank you all. Thank you, Jackson. Really appreciate your time, mate. As I said, we'll keep the engagements going. We've got a few things planned, right, in terms of coming up. So
yes, we do.
And we can't reveal too much at the moment. So, but just have to look out for the spaces and the different socials and keep an eye on in terms of what we're doing. But yeah, no, really appreciate it. Have a great day, everyone.
Thank you
for joining us.
You too, Louise.
Same place, same time next week. Take care, all. Bye-bye.